ETFs Explained Easter Edition. Now, if you choose or when you choose to invest into the share market, you can do so in a range of different ways. One way is you can go and buy individual stocks. Different companies come in different shapes, sizes, different industries, different price points, different valuations, a whole range of metrics. An alternative to going and picking individual stocks is to invest into something called an ETF. Now, an ETF provider will bundle together a whole range of different investments that are often invested in line with a particular theme. So one style of ETFs is what's called an index. So rather than going and picking individual stocks, you might choose to invest in an ETF that replicates the Australian stock market index, or it might replicate the US stock market index, or it might be a gold miners index, it might be a technology companies index. So instead of picking individual stocks with one trade, with one investment, you can invest into all of the different investments that make up the ASX 200. If we use all of these eggs as an example, there's a whole lot of different businesses in here: BHP, Woolworths, Telstra, Afterpay, whatever, whole range of different businesses. But the thing that they have in common is that they are all in the ASX 200. That's an index. You can do the same with gold miners. You can do the same with technology stocks. You can do the same with battery manufacturers through a stock called ACD. So they all have something in common. An alternative ETF structure is what's called an active ETF. So instead of just picking one investment to purchase, that where all of the underlying stocks have a particular theme, it might be the ASX 200, the gold miners, whatever it is, as I was explaining, that ETF provider might take more of an active tilt. So they might decide that they like more of these gold ones with the purple band on them. So they'll buy more of them in their portfolio and less of these blue Oreo ones instead. So they're overweighting to this particular area or this particular stock, this particular theme that they think is better value than this one. Now, why do people invest into ETFs in the first place? The main reason, I guess, is, well, there's a couple of reasons, but one of the main reasons is a thought, at least, that this is a little bit of a less risky investment to place. So rather than putting all of your eggs into one basket, so they say, investing into one company and overloading into one business or one sector, you can get an index, you can get this active fund, whatever it might be, where it's more diversified. You've got a whole range of different investments, and the performance of your portfolio will be dictated by the returns of all of these as a whole, rather than this one or this one or this one.